And we're back with another weekly market breakdown. You know, that video where we take a look at the market from both a technical and a fundamental perspective. And before we continue, please note this information should not be taken as financial advice. I suggest if you are looking for financial advice that you hire a financial advisor, then at least you'll have somebody to blame. If you all want to learn how to trade fundamental and technical information, all of the information is freely available on my YouTube channel. You probably thought I was going to tell you to click the link in my bio and then sign up for my... No. We don't do that here. Any case, guys, let me share my screen with you very quickly. Now, today, the first thing we're all going to take a look at is, let me just remove these things. The first thing we want to talk about is some news events that took place last week, right? And then from there, we're obviously going to, we are going to shift our attention to news events that are taking place this week. We know it's NFP news week. Keep blow. The account is gonna blow again this week. Now, last week we had the final GDP of 3.8, which is why we saw some bullish move in the dollar index that we're gonna talk about. We saw some unemployment claims. Now, you might be checking, why is the data lower, but it is considered positive? Because why? Of the type of news, right? It's unemployment claims. The less people who file for unemployment claims, the less people least people have lost their jobs over there. We had some core PCE price index month over month that came through as where it is last week. Now, going into the new week, we've got the most important news. We've got non-farm employment change. We've got unemployment rate. We've got some ISM services PMI, right? Now, let's talk about these three key things. For those of you that don't know, average hourly earnings month over month tells you, exactly, how much people's salary increases would be based on their hourly earnings month over month. The non-farm employment change means how many new jobs were added to the payroll. That excludes people working on the farm. That means everyone else, all of the people in the USA, all of them, they just exclude people that works on the farm. That is what's called non-farm employment change. How did the employment do without people working on the farm? And last but not least, the unemployment rate is exactly what we have in South Africa, is where people lose their jobs, and how was it positive, was it negative? And I guess it's never a positive thing, right? So now that we got that out of the way, let's go to a technical chart. Now, last week we did anticipate this move to the 0.382, which is exactly what the market has given us, and we then saw a continuation. Market went to go and test that TP1 at minus 0.272. From here we can expect a correction because we have what's known as an overextended W formation. Now, an overextended W formation is considered a bullish pattern from a technical perspective. Now, let's clear the charts over here, guys, so that we can see exactly what it is that we are dealing with, right? The first thing that we have over here is, like I said, we have this massive overextended W formation. From here, I do expect a pullback, and I'm still hoping for the market to hit these levels, but you have to be reactive. And being at the news week, I do expect the dollar to correct itself this week and then see what we get from that news events. Now, here we've got a clear impulse. So after an impulse, you expect a correction. And the best way to measure that correction is by taking your Fibonacci from the low to the high of this massive impulse. Now, you might ask yourself, but Rolio, which Fibonacci level do we go with? Now, let me give you some advice, right? No, this is not advice. Let me tell you something that's factual. Now, in order to know which level the market is going to pull back to, which Fibonacci level the market is going to pull back to, the one thing you want to do is you always want to look left and see which level, which Fibonacci level lines up perfectly with structure. In this case, we have the 61.8 level lining up perfectly with structure because we have this market that tested resistance, okay, once after it's been created. It broke above resistance, and we can expect the pullback for support. And then depending on the news data, we can potentially look at that continuation. Now, going into the new week, guys, very easy. Let's not complicate things. I do expect a correction on the dollar index to that level. And then from there, we're going to monitor the price action. As we said, we're waiting for the jobs report to come through. Now, last week, I've taken this buy on GU, okay, for those of you, because like I said, I anticipated this market to pull back and give us a correction to that level. However, the market came to this level over here. And because of that, I think we banked at 2%. I banked at 2%. I don't know why I say we, because, I do say some of the trades with somebody that I know. But I'm gonna talk for myself, right? So I personally did catch the market till there. I eventually wanted to trade it till there, but it was unfortunate that I think it was a no. I'm lying. There, because yeah, is where we basically, and I was on a higher time frame, where the momentum actually shifted, and I got out of the trade here, and I think it was about a 1.5% on that trade. Now, okay, now because we're expecting some weakness in the dollar index, we can expect some bullish on GU, and from here we can see over here GU is currently just tested previous support on that level over there. Now, two things to keep in mind. We have very important structure if we look left over here. Now, this level over here acted as a level of resistance, and the market's back here tested it as support, resistance, broke above that, tested it as support, market broke below support, all of that supports now acting as a level of resistance. Now, we also have a clear impulse on this level over here, clear impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking the Fibonacci from the high to the low of the impulse. And you can see over here, based on the previous information that I gave you, that we got a 61.8 Fibonacci level that's lining up perfectly with this previous level of resistance that acted as it's now acting as a level of support, and that level acted as support got broken, and it's now acting as a level of resistance. On Euro USD, perfect 3% scored there last week. You can see over here, if we go slightly back, you can see we had it right there to that previous level, but this was also in last week's breakdown. If you followed it and applied the own rules of your own strategy, you would have seen that we anticipated this move in the market slightly to the upside, over there, right? Sorry, not this one. It was this one over here. You can go check out last week's breakdown. You'll see exactly what it is that I'm talking about, right? Now, over here, due to the high correlation between the GU and EU, we have what's known as a clear structural level here. As we anticipate that move back, a weaker dollar index, and we expecting a stronger GU this week. Not a stronger, but we have that impulse. Take the Fibonacci there from the high to the low. We got a 50% pullback and a 50% pullback. It's basically telling you that that's half of this impulse here. So a half of what we have over here is what a 50% pullback would look like, right? So going into the new week, guys, if you all want to get into this, you probably be lucky to get in there. But for me personally, I would wait for the jobs data to come through before I do anything in the market, right? Yeah, we've got another line on NASDAQ over here. Now, NASDAQ had printed this level, broke above that, came back to test it. NASDAQ is now trading below structure, as we can see over here. The market printed that level of support, broke below support, and it's now on its way to test this as resistance. The best thing I can tell you is to monitor the price action at that level if you are looking to trade the NASDAQ, and then potentially look for some weakness. Guys, alternatively, if we do break above this level, then we will probably get this inverted head and shoulders pattern that we would potentially see the market print. Now, you know that an inverted head and shoulders pattern is considered a bullish pattern from a technical perspective. Now, let me go back because there's something like, well, what's going to happen in this long term? Yeah, so this is kind of, that is how far I can lead you guys on from now, because we are very close to the previous structure in the market. And we've got some very important news coming through here as well. This is the Dow Jones. Now, you can see here, if you follow the price actions, Dow Jones, okay, firstly, broke above this level of resistance, came back, tested it as support, started a consolidation, broke out of that consolidation, came back to test this previous level of resistance as support. Market broke above that level, came back, tested this previous level of support once again. The market's trading very close to that level. Going into the new week, if we do look left, we could potentially see a pullback and a continuation, but I wouldn't bet that on my life, because we've got some very important news data coming through in the new week. So this is what I'm anticipating based on price action, that we could potentially see the start of a range for the Dow Jones because of the NFP data that is coming through. Guys, I'm just gonna take you guys back, because this thing is now starting to work on my nerves, because I'm talking but it's not moving here. So this is what I said on Euro USD, right? This is what I said on the NASDAQ, and this is what I said on USD, right? I'm very sorry, but I only saw now that I'm talking here and this thing is not doing anything. It's not changing as I'm talking. And this is one of the reasons why I was switching over to Windows, away from Mac, very, very, very soon, because why it maak vir my baie befok the way things working here. So this, all this stuff, I'm switching to Windows very soon because of this. Any case, let's see if it changes now. There we've got gold. Okay, so I'm gonna close this off by saying that we can potentially see the same with gold in the new week. You know, the start of a range, because we've got some fundamental data coming through. So yeah, you know, I hope you guys are able to see some of the trades that I've taken, but this thing really, I don't know why it does it. Because this is the second time I recorded this video now. The one I recorded before this, it was stuck on Forex Factory, right? It was stuck there. It didn't even move. And I was doing the whole video. So I had to re-record the video once again. Guys, thank you for your time. And as always, cheers for ears.